Hey, what's going on? Welcome to the Loans On Demand podcast, the show where we help loan officers flip the status quo on real estate agents and put loan officers in the driver's seat. And today, I'm super excited because we have, I think, a really important topic that is important for this day and age. And that is, we have Christina.Harmes Hika. I hope I said that right. Was that right? Well, you can tell me, you can correct me if I'm wrong, but, the really important topic today is reverse mortgages. I think so many people in this industry have such a negative stigma or a negative view on reverse mortgages, and we're here to flip that on its head. And here we have, again, Christina.Harmes Hika, a total guru in this space. She's been doing this for, I don't know, I think 40 years or something crazy like that, but, I'm just kidding. I'll let you go ahead and introduce yourself, and we'll go from there.
Thanks, Luke. I'm so glad to be on here. I'm super excited about this show because reverse can absolutely help you flip the script. But I'm Christina.Harmes Hika. I know it looks like Hika.
Hika.
No worries there. It's common. But yeah, I'm a CRMP, certified reverse mortgage professional. I only do reverse, and I switched my practice from regular forward loans to reverse about 10 years ago. And it has just been a wild, amazing, a valuable, life-changing ride for me ever since. And then actually, I as when you differentiate, there's not that many, right? If you niche down, right. Then I ended up getting a lot of loan officers looking to get into reverse. And just naturally from demand, I started coaching loan officers to learn reverse and do it the right way too.
Love it. Yeah, and so obviously, there's been a journey to get to where you are today. And obviously, you're a successful, top producer in the reverse mortgage space. But it probably wasn't always like that. So tell us a little bit about your background, your story, how you got from, where you were to where you are today, and an uber successful reverse mortgage loan officer, right?
Thanks. Yeah. So I started in my dad's office when I was 16. I had a babysitting job, and I was working at Baskin-Robbins, and he came home one day and said, "You need a real job. You're coming to my office. Go buy some business clothes."
That's funny.
And so I started in regular mortgages then. I mean, obviously 16, I was like file cleaning, but I grew from there. I eventually started to sell real estate, and I kind of niched myself as the first-time buyer's agent and loan officer.
Sure.
And giving somebody the keys to their first house is so exciting, or their first home, really. It compares absolutely nothing to the very first reverse mortgage closing. I mean, my first reverse mortgage, I went to closing. I went to all my closings for a long time. And I hugged the wife at the end of closing after we'd signed everything. And she had tears in her eyes. And she was just kind of a frail, I mean, compared to me. Like, I was just kind of like hugging her. And I could feel the relief just drain. They had so many worries, and she in particular just had so many financial worries, and you could just feel the stress melt away from her as I hugged her. And she held on. I mean, I hadn't had clients hold on to me. Like, truly, it just felt like she was so grateful and her life was changed. And it truly was. We can go into the financials and everything later, but we absolutely changed their entire life. They got out of debt, no more mortgage payments. They had funds to live on for the rest of their life in the home they loved. It was just absolutely beautiful. So that hooked me. And over the years, I turned my business to reverse. And that's not necessarily an easy thing. It does take time. Reverse, you really got to build up your credibility. And so I'll throw a tip in here. If you are younger, as I was like 25 trying to be like, I do reverse mortgages. Right. If you dress more professionally, carry yourself more professionally, become the expert, read the books, that will set you apart. Now, if you're watching this and you're, 55, 60, 65, somewhere in there, you have a little more relatability to your clients. So you may not need to have that much put forward, but for younger people, definitely you can absolutely do really well in this business. And I think because I had to overcome those challenges, I went a little too far and I became more of an expert than most other loan officers in it. And that has really served me very well.
Man, I love that. And so, when was this transaction? I think you mentioned something about 10 years ago. Is that right?
About 10 years ago. Yeah.
Okay. So 10 years of doing reverse mortgages. In that time, you've probably heard every every negative stigma or every lie, every myth about reverse mortgages. I'm sure every loan officer listening to this probably, at first we're like, man, I mean, if you don't know the reverse mortgage product, you've probably heard every myth in the book that, reverse mortgage products are bad. They're not good for the consumer. They're scams, things like that. So tell us a little bit about that and how have you kind of overcome that over the years? Because again, I mean, both me and you, I mean, I worked in the reverse mortgage industry for 4.5 years prior to doing, getting into marketing. And, I remember, and I told you the story right before we went on live, but I remember the first time I told the people that when I was going to start at this new company, at this new reverse company, one of my coworkers at the previous company was like, oh, you're going to go scam old people, huh? And I was just like shocked. I was like, man, what in the world is he talking about? And then obviously I went into, I started working there and I realized how much negativity there was around this product. And so tell us a little bit about that. How do you overcome that? And I guess tell us a little bit about how great this product is, because really it is a fantastic product for the right people.
Absolutely. And your experience is not uncommon. It is surprising to me how many other mortgage professionals don't understand the product at all and have some sort of negative myth or stigma or misconception. And that's really what it boils down to. Most everyone with a negative perception of this has a myth in their head, has some idea of how the loan works that's not accurate. And so what I have found is knowing all the details and educating over those objections before they even come up. So a lot of loan officers ask me, how do you objection handle this one? Oh, the kids won't let me do a reverse. I bring the kids in from the beginning. If this is a family decision, let's all go through the numbers together. And so I prevent those objections. And I do that in my language. I think it's really important. The homeowner still owns the home. That's a big misconception.
Right.
It's a mortgage, just like any other mortgage, which is a lien on title. You have to keep paying your property taxes, homeowner's insurance, HOA. You are the homeowner. The only difference is that the financial tool you've used to finance your home no longer requires a monthly payment. And you can actually get funds from the equity in your home in a much different way than any other loan product. So details a little bit. They can do a line of credit that grows, can never be frozen. And we're talking about the FHA HECM right now. There are other types of reverse mortgages. I do those as well, but they work a little different. So the most common you'll hear is the FHA HECM. Age 62 plus, at least one borrower. That's a misconception too. We can have borrowers that are, we can have non-borrowing spouses that are younger, and we can still do the reverse. Gosh, there's just so many.
I know.
There's so many. If you want to throw some at me, I'll handle them. But truly, it's just presenting properly and educating up front and knowing how the loan works. That's the most surprising thing to me is some of these loan officers out there don't even understand how the loan works, and yet they're trying to do it. And so that's one of my missions on this planet is if you're going to try to do this product, learn it, become the professional you really are saying that you are. Because on your forward business, the loans are much more similar. So when you have to learn a nuance, it's not crazy. You can do that on a file. That should absolutely never be done on a reverse because it's seniors. They're a protected class. This is the finances for the rest of their life. And you're helping guide them through that. So they're looking to you as much more financial professional than when you were just doing regular loans, which of course we're all financial professionals, but this is almost like retirement planning sometimes.
Sure. And I think the biggest, a lot of the misconceptions come about because of what the product was in the past, right? And a lot of new regulations have come out over the last, 10, 15 years that have really taken away a lot of these things that were negative about the product, right? And one of the things that I know back when I first entered the market, I think this was in 2013, I believe, is when I first started in the reverse mortgage industry. And that was around the time when they switched from fixed lump sum draw to having like the limited amount that you can pull up front. And then most of the products went over to the ARM products, right? Because what was happening was a lot of people were pulling all that money out. And I think a lot of, loan officers, unfortunately, were pushing, people into the lump sum draws because, hey, guess what? They're getting paid off the distribution. So of course you want them to pull the maximum out because it's going to maximize your commissions, right? But what we would see is people after a year, they ran through all their money and then there was no money left over and they couldn't pay their taxes and insurance. And all of a sudden, the big bad bank is foreclosing on people because they didn't make a payment. It's like, no, it's like they needed to make their taxes and insurance payment from the beginning. That was always part of the program. But unfortunately, because of probably loan officers that weren't educated enough, again, just kind of going back to this idea of being educated with this product, knowing and giving this guidance to people, like, you need to have money set aside. You do need to have some funds. Yes, you don't have to make the traditional mortgage payment, but you still have to make your taxes and insurance payments. You still own the property. And so I think that's some of the things that have changed over the years. And obviously, even before that, there was even more misconceptions and more, not even misconceptions, bad things that actually did happen in the past. And so, I think there has been a lot of changes that have adjusted that. So one of the people, go ahead.
Before we jump from that, can I go over two of the biggest reasons why people have negative connotation with this? Mm-hmm. I think it's important that you guys know the history of it too. And you alluded to it, but I want to kind of give them the details because you need to know this. Your clients are going to ask. It's the elephant in the room. Right. Two really big changes, as you just said, happened around 2014, 2015. Before that, or about 2013, it all kind of came about. And there have been more changes since, but these two changes were really important. One change was about 2014, if you had a pulse and you could fog a mirror and enough equity, well, let's get you that reverse mortgage. They didn't check to see the rest of your finances. So could you actually afford to continue paying your taxes and insurance even with no mortgage payment? Could you keep the lights on? They didn't check for that stuff. So what ended up happening was these really desperate people who really should not have stayed in their home. They needed to downsize. The property was too big. They didn't have the financials. They were given reverse mortgages at much higher loan amounts than we lend today.
Right.
And then they would blow through the money, just like you alluded to, not pay their taxes and insurance. And then we would have these horrible stories in the news. And it's like, okay, but the borrowers had responsibilities and there were in their loan documents, their loan officer should have educated them. And then the other thing was the non-borrowing spouse protections. So prior to about 2015, the way it worked was the older, you had to be 62, right? FHA HECM requires you to be age 62. And the older you are, the more money you can access. So naturally, what would happen? Well, they would say, well, let's leave the younger spouse off because I can get more money if we only include the older spouse. And typically that was an older male, and typically males die first. And for those generations, they were also in charge of the finances. So we had these really bad news stories and just horrible situations where a widow was left not understanding she even had a reverse, not understanding how the reverse worked, what she needed to do, and it was called due and payable. Well, that was not a good situation at all. So now in 2015, they brought in the non-borrowing spouse protections, where a non-borrowing spouse, meaning they're under age 62, but if they're still living in the property, still married at the time the borrower dies, they can ask for a deferral. And so now that mortgage balance isn't going to be due and payable when their spouse passes away. Or assuming they do all they need to do. There's some paperwork to be done. But those two protections changed. It should have changed everyone's perception, but it's taken some time. We have to get over some of that negative history. But knowing this and explaining it and knowing these protections have been built in, along with the counseling, along with the mortgage insurance, non-recourse loan, all these amazing protections, they're just not known about really yet. So that's my mission.
Yeah, it's an education thing at the end of the day. I think so many times it just comes down to people just not being educated on the new rules, and some of these aren't even that new. I mean, most of these rules have been implemented really like 7, 8, 10 years ago that have protected the borrowers since then. And even before that, there were still some protections, but these newer ones that we talked about, right, the non-borrowing spouse and the other limits as far as like how much you can pull out, have made a big difference in making sure that people aren't getting foreclosed on and things like that. But let's pivot a little bit. You talked a little bit earlier about using it as a financial planning tool. One of my favorite people to reference in that regard is Wade Pfau, I think is his last name.
Yeah.
And so tell us a little bit about how you are able to leverage this product and how you can help people really plan for retirement in a way that allows them to obviously not outlive their money.
Absolutely. Wade Pfau is amazing. I'm actually thanked in the credits of that book. So I absolutely love everything he talks about. He's been such a pioneer because it is a retirement tool, But us mortgage people don't do the rest of the retirement plans. And so he's educating financial planners about, okay, hey,
Right.
look at the entire picture, not just the assets. Any of you who are familiar with HomeBot, they often say the statistic, which I love, which is 83% of a homeowner's wealth is tied up in home equity at the average American homeowner's retirement age. That means the financial planners are trying to make someone retire on 17% of their entire wealth. And it's just not working. It's not a good plan. It's not enough. People are living too long. Healthcare costs are rising. So they're actually bringing reverse mortgages into the picture now. And so there's a big opportunity for loan officers as well. Now, note of caution. When I say that, I end up getting new loan officers to reverse, not new to the industry, but new to reverse, and they run to financial planners and start saying, I do reverse mortgages. And please don't do that. Read the books. I actually have it here. Wade Pfau has a book and it's amazing. Get it on Amazon. Read the books, set your approach, because financial planners are also very intelligent, especially with numbers. So they're going to need to model, they're going to need to ask. If you can't explain what the expected rate is, you need to not be talking to financial planners yet. If you can't explain how a lot of these things work, the 60% that Luke, you alluded to, the 60% cap that first year, you need to understand all of this, because they're going to ask you and they are not going to have patience for you to go, I don't know, let me get back to you, because there's other reverse people knocking on their door who do know the answers. I don't know why I jumped on that, but financial planning tool. Yeah, so looking at the whole picture, one of my favorite things is the strategy to be able to pull from your reverse mortgage line of credit when stocks are down like they are right now. I think
say this year.
Yeah, this year. Perfect. So I think we're down 20% in the stock market. So people who have a reverse mortgage line of credit, pull your funds from there instead of your assets with your retirement planner, because when you pull those when it's down, they don't have the chance to recover. And your financial planner understands this. They'll explain it all. But what they don't fully understand is that they can use the reverse mortgage line of credit as funds instead, right? You can't just stop taking income because the market's down. You still need that income. Well, you just change the source. And studies have shown when you operate that way with the reverse mortgage, the overall retirement plan is much better. You can live longer. If those of you who've seen your retirement plan says you must die by this age, well, that extends when you bring a reverse mortgage on. And a lot of the time, the overall legacy they're leaving to their kids is actually greater, because we're not draining down all those assets right up front and then getting the reverse mortgage once we're desperate. That's a really old train of thought way to do it. And it's not the most effective way.
Right, and that's the biggest thing that people talked about. It's like, well, it's a loan of last resort, right? I mean, that was that was what people talked about way back when I was even in the industry. But I'm sure people are still calling it that, loan of last resort. But like ultimately, like with the new qualification process, like it's not really a loan of last resort anymore, because you do have to qualify to a certain extent. You do have to have enough residual income, enough income coming in to cover your expenses in order to qualify for something like this. And so, I mean, I do think it has turned into a more viable product for. And really, I think it's better served for people that have a little bit more income and retirement, because, again, you do have to qualify for it. So, use it in the way that it's, better intended to, or maybe not even intended to, but now that it's, all these regulations, really allow you to do that. But again, I mean, how do you learn how to do this? Like, where do you get the knowledge? And the other thing, you were talking about financial planners before I get into that. Financial planners have the same stigma that loan officers do and that the general market does, right? So if you don't have all the facts and you're like, I do reverse mortgages, they're going to be like, yeah, reverse mortgages are scams. And if you can't have a conversation about why they're not scams, then, they're just going to be like, yeah, see, I told you they're scams. These guys don't know what they're doing. These are just scams, right? So that's a huge point.
Really, really good point, because that's true. And they never use them anyway, so you just wasted your day trying to go after somebody who's not going to send you anything.
Right, exactly. So, but anyway, so back to kind of my other point was, like, how do you learn? Like, I mean, you learn from Wade. Like, how else are you kind of learning this knowledge, or did it just come from doing more reverses?
Well, personally, I have had a long, arduous road. And so I personally try to help people not have to have that road. Just a couple of tips right away. I keep books on my desk. This is by Dan Holtquist, Understanding Reverse. it is a really good way to understand and simplify your reverse mortgage knowledge. Then your lender has courses, of course. They're very topical. And what I found is that through my journey, the lender courses were very helpful for one specific topic at a time, but I didn't get the whole picture. And I had mentors, thank goodness. I did have my father as a mentor. I had another mentor, Monty Howard, who is a CRMP as well for years in the industry.
I know Monty.
Oh, yeah. So he's just dear to my heart. He passed away. I don't know if you knew that. But so
he's at C2, right?
Yeah. Yeah. That's funny, actually. I got this necklace in memory of him because
that's awesome.
We assumed his position when he did pass as the reverse leaders. And that's so funny you bring that up and you know him.
He was one of the big guys back when I was in the space, and I do remember hearing a couple years back that he passed away. So
he was sad, incredible.
Big advocate for sure.
He and his wife would take a motorhome and drive up the coast and meet all their clients along the way, getting apps in person, closing them in person. It was just a beautiful business model. But okay, so to answer your question, because I saw a gap in the market, right, there's a lot of product knowledge available at the lenders. Take it. Absolutely take it. There's a lot of product knowledge available through books. So we've got Understanding Reverse by Dan Holtquist. We've got The Retirement Researcher's Guide to Reverse Mortgages by Wade Fowle. What other ones do I have? Don Graves.
Has a couple of books.
Wade writes a lot. Don Graves, Housing Wealth, and then I haven't read this one yet, but I do know the guy and I like and respect him. So I'm assuming this is a good one. Home Equity and Reverse Mortgages by Harlan Akula. I think I'm saying that right. Those are kind of the four basics for knowledge. But there was this gap in the market, and that's where people kept coming to me was, okay, how do I actually present this? How do I overcome the objections? How do I do this loan in a smooth, quick fashion? And one of the things, especially loan officers listening, you may have tried a reverse, or maybe you've fumbled through 3. That's probably the max I hear about with success before you really come crashing down. But so maybe you have fumbled through some. Maybe an AE has been real, like an AE like you, Luke, has been really helpful and held your hand and done all the work for you. But you can't build a business that way. You're not going to get very far in reverse if you don't know what you're doing. If you're relying on others to do the work for you, what we see too is sometimes, Luke, I'm sure you were an amazing AE, but sometimes we get the wrong information from AEs. And so you really need to know your own stuff. You know, they're busy. They've got hundreds of clients they're trying to service. So because of that, I created a coaching program that is more comprehensive for the loan officer on the front end. So there's a course I did where it starts from, okay, somebody called me and said, I'm interested in reverse. What do I do? And it takes them all the way through the steps, structuring your loan, pricing it so that you're not taking advantage of your client, because that is one possibility in reverse, especially if you don't know what you're doing. We see people who have a lot of confidence from being in the mortgage industry for 20, 30 years, but they don't know reverse. And so they're relying on that confidence, and it's completely false confidence, because when they get to reverse, a lot of the time, they're not pricing it in a way that's super favorable or even favorable at all for their client. And they're just trying to max out their commission. And unfortunately, I wish that activity were not possible, but it is possible. So it's really important that you know what you're doing and that you're building your business the right way, and that you're sending your clients, either doing it yourself or sending them to somebody who really does want to take care of them. And the commissions come. I mean, everybody who does anything in this business knows that if you take care of your client, the referrals roll in. It doesn't matter what you make on one deal. It matters what you make on 100 deals over your years of work, and you're not going to get to the 100 if you're trying to max out what's in it for you on one loan ever.
Yeah. So. That's 100% right. It's funny because I remember talking to someone a while back, and this guy closed maybe 1 or 2 transactions a month, and he's like, man, I want to work somewhere where I can make 300 bips on every transaction, but like no one will hire me. And I was like, well, yeah, no wonder, because you're trying to make 300 bips on every transaction, like, you know what I mean? Like, and on the reverse mortgage side, I mean, you can make very, very good money. And again, back when I was an account executive, I saw one person that did, made $45,000 on the YSP plus they took like, the $6,000 origination on the front end, right? So, again, that's not illegal. But like, I mean, you're making so much money in your YSP, you could at the very least waive your origination fee, and you could even cover some of those closing costs, right? I mean, $45,000 check is just ridiculous already on something. It was a big loan, right? It was a California loan, big loan amount.
Of course,
this
but
was back when we were paying stupid amounts too. It was like, it's not quite as high anymore, but still, it was ridiculous. It was the biggest thing I ever saw. I mean, $55,000 for a transaction was ridiculous.
But I guarantee you that was not a top producer, because that origination fee came out of the dollars proceeds, dollar for dollar, and there was absolutely no need for it. Likely, they also had a higher interest rate than that client really should have gotten, which translates to more proceeds. The lower the interest rate, the more proceeds the borrower gets. And so not knowing this stuff, I bet that guy just send me a quote, Mr. AE, whoever his AE was, get me that quote. And he probably pegged it up once he saw the rate sheet, and unfortunately they don't understand that relationship, that when you do that, it is your borrower's cost for doing that. Let a financial planner see your paperwork for that. You'll ruin your business quick acting that way.
Yeah, no, absolutely. So, you just to kind of get into a little bit of that, how to market this product. And I know you're not a big fan of telling people how to market the product, but if you were to go out today, I think we talked a little bit about something right before we got on, but what would you do? What was one thing you would do today to go out and get more business?
I started in-person networking, and I think that opportunity is coming back. And the biggest mistake I see forward loan officers do when they're trying to bring reverse business in is they go and say, well, send me all your mortgages. Rates are whatever they are right now. I don't even know because I don't do forward. And you can refinance, you can get cash out. Oh, and by the way, I do reverse mortgages too. And so now you have just split your identity in their mind, because they don't see a reverse mortgage as something a regular mortgage loan officer typically does. They see a reverse mortgage as more of like a financial planning tool, and they want someone who's specialized in it. And so that's my biggest thing is, if you are trying to turn your practice to reverse, you need 2 sets of business cards. And this is how I started. I had my business card in my purse that was for regular mortgages, and I had my business card in my purse that was for reverse mortgages, and each looked like that's all I did. Depending on the conversation I was in, I would hand out the appropriate one. And you have to go get yourself in conversations. You will get grilled, but that's good. It will show you what you don't know. It will make you better. It will make you faster, stronger. You'll build yourself better. But yeah, absolutely. That's the biggest tip I have. And truly, one of my methods is I do not teach people how to market for reverse unless I know they know what they're doing. And now you can show me that. I don't have to be your coach to understand that you know what you're doing. But I've seen too many loan officers. I've coached hundreds of loan officers at previous companies and my coaching company now. And they think it's easy. And so they go out there, they say, oh, I do reverse. Then they get somebody who says all the terrible things and they don't understand what to say back, and they get scared, and then they never want to bring up reverse again, and they abandon it entirely. And or they mess up a deal so badly they get a horrible Google review, and it ruins their entire business, not just the reverse side. So this stuff is the reason I have these methods, is to protect the loan officer as well as the senior. And personally, I have helped change the reputation of reverse, and it's on the uprise. I don't want a bunch of loan officers messing that up. So I'm trying to lead by example and teach as many people as I can, because you're the professional. They're looking to you to know this stuff, and you should know it. It's a mortgage.
I love it. And in the true spirit of the show, and obviously flipping the status quo on real estate agents, is there any way that using this reverse mortgage product that you can bring some sort of other type of value to to real estate agents that they might not otherwise get?
Absolutely. If loan officers don't understand reverse, realtors really don't understand reverse. And they don't have somebody in their mind typically that they like, trust, and know does reverse. They may not know anyone that does reverse, period. But they may know a loan officer who said, oh yeah, by the way, I do reverse too. But they didn't prove it. They've never sent them any business. They don't really trust that relationship. So if you can be that person, just say, I'm a resource for you, because there is the H for P product. I want to talk about that in just a minute. But before we get there, I want everybody to know that once you've pigeonholed yourself as the reverse person, you stay in their mind as that. How many,
Right.
Luke, this is probably the best question for you. How many loan officers do you think the average real estate agent keeps in their head when they think of, oh, I've got a new client, they need pre-qualified? How many names do you think spin around in their head?
Well, I mean, if you're talking to the average person, they all say three. Oh, I got three.
Okay.
But, they probably have 10, 15, 20, 30 people calling every single Monday at the very least, right?
Especially right now.
Especially now that the rates are up. Right?
Yeah.
Everybody's calling real estate agents. So,
Yeah.
generally I would say 3 to 5, though, is probably what they're, the max
Okay.
amount of people that they're probably working with on a regular basis, right? I mean,
Yeah.
unless you're like a super top producer or something.
So 3 to 5, compare that to one reverse person. Typically, they only have space in their head for one person per niche, right? They've got their
Right.
1003 exchange person. They've got their investment property person. They've got their DCSR, all those various specialists. Reverse is a specialty for them. And the cool thing is, you talk to realtors about the purchase reverse mortgage loan because it can help them create listings, which will draw them to you absolutely. You've got to go into my content I've got a Facebook group. You've got to learn how to do this stuff before you start talking about it. But you can help them create listings. You can help them create business where there wasn't any before with this reverse mortgage, partially. Just like loan officers, there's not that many of us. There are really not that many real estate agents who truly understand the power of the reverse purchase loan. So you talk to them about that, but then you become the reverse expert in their head, who they're going to go to. So that you will get questions and you answer those questions and you start supporting and building that relationship. And then what happens is beautiful. Then their social network naturally comes to ask them about reverse mortgages because so-and-so's father needs one, but he doesn't want to move. So they end up sending you all the refinances too. So you end up just being the person they send the refinance reverse mortgages to and the purchase reverse mortgages, and you help them grow their business. And instead of asking them for leads, now suddenly you're having people come to you to talk about the reverse purchase, and you're handing the lead to the real estate agent.
Right.
And you're in control, which is really important in reverse because the agent doesn't know what it is. The other side agent doesn't know what it is. If the seller chose title and escrow, they don't typically know what the heck they're doing. And so the transaction can become out of control if you don't run it. And so starting with, I gave you that lead, this is my lead, can really help. And for my real estate agents, I get them to choose the title and escrow that I know what they're doing, or that I know they know what they're doing. And that makes the whole transaction go so much smoother. So there's a huge opportunity here, but it's not a free opportunity. You have to put in the work. And it can pay off in big ways.
Yeah, no, I love that, and I think that's huge. I mean, it's one of the biggest things that I talk about is being able to give leads back to real estate agents, and that is one big thing, right? With HECM for purchases, which is kind of what she was talking about, is you're actually able to. A lot of times, people need to downsize, right? So that turns into a listing, right? This person needs to downsize into a smaller property. Maybe this was their home that they had their kids in, all that kind of stuff, and they're wanting to move into something smaller. Great. Now you have a listing and a buy side, right? A list and a buy side a lot of times that you can get them into because they're listing that house and in the future, they're going to buy their future house with a HECM for purchase, which, obviously is a great thing for real estate agents to get, double the transactions from one deal pretty much. Oh, I'm not hearing you.
Sorry, am I there?
That's okay. Yep.
I have a presentation, but just one slide of it talks about how everybody's going after millennials, but boomers are about the same size demographic, but they already own their homes. Millennials, a lot of them, those are the first buyers. So you're not helping your agent get a listing, which is what they really want. The reverse mortgage purchase loan can help create those listings and the buy. And silver divorce is on the rise. So a really cool thing, if anybody out there is listening is dealing with this, you can help them turn the marital home, into 2 purchases. If they're selling that home, that real estate agent now, instead of just getting a listing and then they go to the wind because they don't have enough to buy again without a payment, which most people don't want in retirement, now they can actually help both of those people purchase again and experience home equity. That's really an important investment, I mean, that. They know that, but you're the power behind it. They don't understand any of this is possible without you.
Yeah, no, absolutely, and that's huge. It's huge, and again, I think you hit it right on the head. That if loan officers don't know what this is, you're darn sure that real estate agents do not know what a reverse mortgage is and how to use it. So you get educated, you become the go-to person. In no time, you're going to be Christina, the next guru in the reverse mortgage space. Crushing it and having all kinds of success. So
I hope
I
so.
love that.
The market penetration of reverse is under 3%. So
Right.
there's just a huge ocean of opportunity. I hope there are many me's out there and that the whole concept of reverse mortgages changes and everyone goes, oh, it's just a financial tool. It's a great retirement product. I have one. My neighbor has one and openly talks about it. So please, by all means.
Do it. Yeah, and I think the stat is like what 10,000 people turn 62 every day or something like that.
Yeah.
So there's a lot of opportunity out there if we can just get more people that understand the product. I think that's really the biggest thing. I mean, it's been the same way even when I was in the industry. It always came down to education, right? Educating is where it's going to take us to that next level where there is more market penetration.
Absolutely.
So, thank you so much for your time, Christina. But before we go, if someone wanted to learn a little bit more about your coaching program or just kind of connect with you online, where can they find some more information about you?
Yeah, Facebook, really simple. I run a free Facebook training group for loan officers. You can message me. I'll send you the link. Just Christina.Harmes Hika on Facebook. I don't think there's more than one of me.
Yeah, don't say Hika because she might slap you after the video goes down. So yeah, thank you so much. So find her on Facebook, message her, get into her Facebook group, learn a lot more. She's got a ton of free resources. I'm always tagging her in posts when people are asking about reverse mortgages because again, she's positioned herself as the reverse mortgage guru, the reverse mortgage queen, and it makes sense when someone shows you that they're the expert. It just goes to show. I mean, again, I've never even met Christina other than being online, and then yet I'm over here tagging her in a bunch of posts just because I've seen her content. So think about this as you're kind of trying to grow your business, become known for something, even if it isn't reverse mortgages, even if it's something else, right? VA, FHA, first-time home buyers, whatever it is. If you become known for something, you're more likely to attract that business versus thinking that you're going to lose business if you only talk about one thing. So that's super important. So thank you so much, Christina, for being here, and for everyone listening, have a great day.
Thank you so much for having me.
Thank you.